Hey everyone, it's Greg. This is Wall Street Weatherman, and it's great to see you again. In the last video, I asked you for your feedback in regards to the show, and we talked about travel plans a little bit. The the good news, number of good news is number one, my wife is still retiring, which is fantastic. Number two, we are pushing back our plans a little bit as far as the time frame and reorganizing it a little bit. So the cool thing is, I am back and totally into my routine, my daily routine. I was up at 4 this morning, an hour early, and just excited to see what was going on with the markets. Um, and and I want to also say thank you to everyone who gave me feedback on the show. I gave you my email address, wallstreetwman@gmail.com. You can always email me there or drop a comment for me to read. And thank you for the people who I did hear back from. I got some great feedback. Sounds like people are enjoying the show, and but I'm always open to tweaks here and there and trying things out. And so thank you very much for that. Along those lines, there is one thing that I am going to change that is significant. Okay, so here it is that when I was growing up, my parents said that, in polite society, you don't talk about sex, religion, and politics. And I have sort of not delved into, waded into the pool of talking about politics too much. Uh, but when it absolutely becomes more and more of a factor on markets and on our money, which is number one, at the end of the day, that's what this is all about, then I'm going to have to start talking about it. And so if you disagree with it, then that's cool. I respect that. But I call balls and strikes like I see them. Okay. And right now, over this weekend, there was a lot of tumult with upset with Greenland. And we're going to talk about that. But let's just look at 2025. And slowly but surely, the US government is starting to put its thumb on the scale of business and of the economy and of the markets. There is no doubt about it. There is more and more state-sponsored capitalism. Okay? The reason that is a fact because the United States government is taking control of all sorts of different industries and businesses. Look at Intel, taking a stake in that. Look at MP Materials, the mining company. Even Nvidia, that if we're going to, if Nvidia is going to sell their chips to China, then the US is going to profit from that. The government is going to, is not only going to slow down the process with approvals, but they're going to take a 25% cut in that. And these are facts, and these are facts that are changing the market as we know it. It really is. And it's becoming less and less of a free market in the terms of buyers and sellers, determining the prices that they pay. And so this is something important, and this is something we have to talk about. And most recently this weekend, Trump, the president of the United States, Donald Trump, has uh, doubled down on his threats against Greenland. And I can't listen anymore to arguments about it's in our national security. And I'm sorry, it's in our national security to invade a sovereign country, territory, to go in and remove leaders that we want to from Venezuela. And isn't this the same language that Russia used with all of the satellites like Ukraine and Georgia and all of the countries that were the buffer zone between Russia and what about China? Doesn't this absolutely give China the right to take over Taiwan? Imagine what would happen if that occurred in the market. And so I get that, but no, under international law, it is illegal to go into another country. But when I hear people, when I hear pundits in the market at respected news sources and networks talking about acquiring Greenland and you know how it's our right to defend ourselves. Um, there's a problem with that. So that aside, the European Union has pushed back on this and they have unified around it and they have sent troops to Greenland. And also, they are now talking about reciprocal tariffs, about not only stopping the tariff agreements that we have in place from last year between the EU and the United States, they're talking about punching back with tariffs of their own. And now the European Union is our biggest ally in the world and our biggest trading partner in the world. And so this is absolutely concerning. And this morning, the markets were down. Like I suspected, people bought the dip and it started coming back up. And right as I'm starting to film this, they've turned back down and are down over 2%. We'll see where the market closes. But this is absolutely a huge factor. And I think that, you know, at the opening of the market, the VIX was up 30%. The fear factor, the VIX index, was up a 30% spike in that. And right at the opening, the advanced decline of stocks, in other words, those going up versus down, were negative 95%. So 95 out of 100 stocks were in the red at the open. And that is what the market is, you know, gives a reflection of what the market's thinking. We have been living on borrowed time. And I'm just going to put this out there, guys. You know how cautious I was last year. And the, the March tariff scare, where everything went in a steep bear market and then came bouncing back, was incredible in its veracity and the short time frame of it. And since then, a lot of the dips were bought through the rest of the year, and we ended the year up on the S&P over 16%. Incredible. But again, everything is at an all-time high. Everything is near an all-time high. The S&P, the NASDAQ. Yes, we can talk about the Dow because that is too, even though it doesn't matter. But sectors, technology, materials, everything is just the valuation of the markets, the multiple, the price to earnings multiple of the overall S&P 500 is above, quite a bit above its historic average. And all I'm saying is, in the most basic sense, when we're pushing against the highs, that gives us such little room to maneuver, such little buffer. And so I'm concerned. And you know, I'm always concerned. And I think that's my job to look at, as we've talked about, always looking at the risks first, always thinking about the downside before the upside, which is just so incredibly crucial and tough to do. But the downside now, just generally speaking, we have since October, the technology sector has, the S&P 500 since October is flat, okay? We have hit those highs and hit those highs, and we haven't come down. We've just been bouncing, but hitting our head against it since October. Technology is down. The artificial intelligence play is, the bloom is off that rose. And the reason that's important is because these are the biggest stocks in the world, in our market, in the world. And the confidence of the return on equity, the return on investment of the artificial intelligence and technology stocks is in question. Rightfully so. We are spending billions and billions of dollars, while China, at a fraction of the cost, has developed open source large language models like Qwen and DeepSeek, and they have been investing in energy for decades, longer than we have. They have so much energy to run their models and their technology. It's very concerning. I see things at elevated values, very expensive values. The technology is being sold, and the reason the market is still staying up is because the money is, from what I see, it's really just trying to find somewhere else to go. Technology sells off. The market goes into healthcare, and healthcare holds it up for a little bit in November. And then it rotates into the financials and the banks. Uh, and that, holds it up for a little bit. And then it rotates into materials, and, as you know, gold and silver and precious metals and platinum and palladium, and all very important. And then it goes into energy and oil, and and then in the last week or two, it is really starting to go back to that highly speculative, high beta, high risk, non-profitable companies that are not proven. They are borrowing so much money, making very little, making no money. And so things are very precarious right now. And I'm not saying this to scare you, but I am saying this because I reiterated in the last video that I was overweight cash, that I was doubling my overweight in cash, because I am just feeling like we are living on borrowed time. And we have been, since we have all sorts of things, since the tariff scare, that we have just had this knee-jerk rotation, buying the dips and rotating back and forth from big technology, from technology into other areas, back to technology. Well, now that technology is not a place, we can't go running back home. And so we've been rotating among all the different sectors, and those valuations have dislocated. I mean, look at the price of silver. It's approaching $100. And yes, it's a precious metal. And yes, it's used in a lot of electronics and semiconductors and solar panels and all sorts of things. But look at the chart of silver. I mean, things are concerning, you guys. And so I just want to start off this new series and the new year, calling out again that 2026, like at the end of last year, I see a more volatile market. I see the biggest technology names, which have been the bedrock of our stock market, that they cannot continue. They are so large, they cannot continue to grow at the same rate that they have. A, okay. B, they are spending hundreds of billions of dollars on the AI investment landscape, and then people are not convinced that all of that investment is going to have a good return on it. So if that bedrock starts to come under question, and the growth starts to, just by the law of large numbers, starts to shrink, the growth percentage, and instead of all that amazing cash flow, they are instead spending money, and in a few cases borrowing money because of that. And then the very thing that is the next great transformation in technology, which 100% is amazing, AI, artificial intelligence, is being called into question. That is the foundation that has held the market up in 2025. And this year, I see much more volatility. I'm quite cautious right now. And the upsetting our greatest ally in the world and our number one trade partner in Europe, in the collective of Europe, to me at this point in time is absolutely just ever more concerning. So I don't want to be alarmist. I want to be real. And I am going to start to incorporate everything that I see into these videos, because I'm here for you. I know this is going to upset some people. I'm cool with that. But I am here to be safe, number one, and number one to protect and preserve our money, you and me. And so that's where we are right now. I will let you know where things go from here and what I see. We'll see how today ends up. And I can't tell you, even a week ago when the Department of Justice announced the investigation into the Federal Reserve Chairman, Jay Powell, about how he was spending money to renovate, the offices there, which have been under renovation since before him. And I mean, this is ridiculous. But I will say this, that if Alan Greenspan and Janet Yellen and Ben Bernanke and all of these incredibly historic and important figures in the world of the Federal Reserve and finance and Treasury, if they did not come out as a collective and defend the independence of the Fed and give the market that confidence, that 1 week ago we could have been in such worse shape than we are right now. And it's just since the beginning of the year, Trump has been hammering away at so many different things. Like the calendar turned and he was like Venezuela, Greenland, this, that, boom, boom. Geopolitics is real. It affects the market today. We're going to continue to talk about it, and we are going to have real conversations because, again, you, me, our money being safe, this is what it's about. All right, guys, I appreciate you. And again, thank you for all of your feedback. And I'm super psyched to be here. Yes, I'm looking forward to further down the road, doing a little more traveling and all of that. And I'll talk about that. And maybe even we'll do some shows from the road or something like that. But thanks again for your feedback. I hope you guys had a great long weekend. And I want to also say that Dr. Martin Luther King Jr. Was an incredible figure who advanced human rights and civil rights. And yesterday was in honor of him. And I give thanks and um, and admiration to him and everything that he stood for in terms of people, in terms of what America stands for, which is you can be in this country and you have all the rights as the super rich, the color of your skin, all of these types of things, that we have the freedom of speech and we have the greatest country in the world because of people like that. So a shout out to and lots of admiration to him as well and his memory. So thank you guys um, for listening, and I'll be back soon and we'll talk more about the market and we'll see where things go this week. All right, guys, take care. Bye bye.